Good afternoon. This is Ken at Tortoise Capital with a review of the daily trading plan for July 15th, 2019. It's Monday, day one of the live trading workshop in Kansas City. So we're getting prepared for Tuesday's trade. So this is our review of the report. So we developed a handy note-taking sheet to reverse engineer all of the things that come out of the daily report in three columns, reading from left to right, top to bottom, the six mechanical swing trade patterns, and in each of those areas we would note the symbols that we would want to prepare in the second stage of our plan and align them with the particular patterns of interest. And so a person might only be interested in one or two of those and specializing. So you would just go to the report and pull those out and make those notifications or notices. Under the styles or strategies, things like max pain range compression, max gain range compression, pinch and stretch, daily squeeze, ADX stat, the Four Seasons of MACD, the Auto Framer RLFF, and then a couple slots in case people have their own hybrid forms of patterns. Under the continuations, we would be noticing anything that we had been trading and the signal was still open and we wanted to project that forward into the new day. Middle column, we're looking at market conditions and major indices, starting with volatility, then SPY. That should read SPY, not SPT. The Dow, the Qs, mid caps, small caps, then Euro Asia blend, Europe, China, Latin America, and Brazil. Under other assets, these would be lesser correlated asset classes that might be working if the main indices weren't. Treasuries, real estate, precious metals, oil, or any other specials that someone has that's unique to them. Under the sectors, we're looking at the 9 sector spiders, and we would make notes in there about what kind of behavior, what we might expect, or maybe adding a logic chain for things we wanted to specialize in, and maybe put in the space provided an additional sector like the semiconductors, so we could look at AMD versus Intel versus Taiwan Semi versus NVIDIA, and build a little subsector logic chain if we were specializing in that area. Then under the frog, these are all the frog champions. I am prepared to trade every single day on daily and swing trends. And underneath that might be any special frog candidates that maybe come from the daily squeeze that I want to trade in a hybrid frog manner, or anything else that has compressed but has a potential for a one-day pop and a large directional range day. So there's half a dozen different sources for potential good frogs, and that's where I would put that. And then space maybe up on the top for notes that came out of my daily after action review of things I wanted to emphasize for improvement that day, and at the bottom maybe other notes to self, maybe something about scenario notes that came out of my integration of all these different things. Maybe that's where I make my notes for tomorrow's 1 minute trading plan elevator speech, something like that. So we're going to give that note sheet a try and see how it goes, but I think already that it works because that's how I mentally build my trading plan from the daily report. This is a reflection of that. So daily report for July 15th. Market health check. All of the support and resistance lines that we drew from yesterday's weekend monthly, weekly, daily, 2-hour, and 30-minute charts still remain in effect, but there was very little movement in the market today. The doji got even dojier. There was no follow-through in any direction except for energy, which failed. So all of that still remains in effect. The market is still in summer, but it's very thin, and the risk is to the downside. There's potential on the upside, but today was kind of an anomaly. The least expected thing was what actually happened, and that was a low volatility, tight range sideways chop. We were expecting bolder moves in either direction, and there was very little of that. We're trying to make sense of that, what it means for tomorrow. I think it's more likely that it's down, because if they were going to run away and go, we'd have seen some of that today, but we didn't see that. But surprisingly, there was no hint of fear. I think tomorrow it's more likely to see that fear. The absence of follow-through is information, or failure to fail further. So I'm still cognizant of the downside, and I'm ready to trade that with VXX. So we'll be watching in the morning for the futures for an indication of the open and the size of the gap to give us an estimate of the size of the follow-through. So all other things remain the same. Market remains deeply overbought. I guess deeply overbought doesn't make sense. It should be highly overbought, I suppose. Got to get my adjectives right. Um, Still on risk on in the risk Z. So it still favors long side and swings to the upside, but with the proviso of near all-time highs, so there's a certain risk to that. No signals in overreaction or channeling. The max pain candidates were very effective today. Merck, Johnson & Johnson is very interesting. Amgen, Merck, Eli Lilly, all are pretty interesting to me. In the Dow 30, a handful of dojis, only one overreaction long in Merck, and that's also 4.5 to 1 on the auto framer. Pfizer, 2.5 to 1 on the auto framer. It was also a good frog candidate and was a percent winner today, so Pfizer and Merck should be on the short list. Travelers had a good day today. We actually bought that with an idea towards a long side swing trade. Interesting chart. I'm looking for more of that on the turbo tomorrow. Caterpillar was outstanding. Apple was a tech leader. So if the market's good and technology is strong and Apple's better, then Apple's a no-brainer. Go to early. Boeing had problems, and so if it continues to fail and the Dow is bad, that's where the downside energy will be. Looking way over to the right on the NDXs, you saw breakouts on Travelers. AXP and Home Depot, Procter and Gamble, Walmart was amazing today, and it looks amazing on the swing. So all of those are follow-through candidates to the upside if the market doesn't melt down. So if the market's up and the Dow is strong and those are better, that's where you go. But we're also going to see that XLY, the consumer staples, I think, or consumer discretionary, was another one of the very strong XL series, so that must be on your short list. So when we shift to the tactical summary, XLY is consumer discretionary, and that had a big breakout today. So did technology, the Qs, at a 108 on the NDX. Auto framer, emerging markets, treasuries, Europe, and Euro-Asia blend, all of those had still have a good auto framer. Europe and the EFA were dojis. The emerging markets was a doji today, so that's a compression that could expand. So a good handful of candidates that made breakouts on the 10-day, 1 month, 3 months, 6 months, so you can see those as well as I. Some good frog candidates. The weakness in Brazil caused me to go short Brazil on a swing today. I'm looking for more follow-through. So it's a frog champion, it's a frog candidate, it's a continuation pattern, it's a swing short, so I'll be looking to be very efficient and effective with Brazil tomorrow. It's one of my top 3 targets to go to right away. So special case. The goodness in silver today makes me want to look at wheat and precious metals as a way to play the aggregate precious metals sector with a liquid, very tradable, leveraged, it's like a leveraged precious metal that's also liquid. So Wheaton is a special that I like a lot. Oil and energy were the big downward movers today, so I'm looking for continuation patterns there. Weakness, I will pile on. XOP was especially weak today. So if market is bad and energy is worse and XOP is the worst of all, that's the no-brainer go short candidate. Pinch and stretch, you can see in first column the ones that have stretched the most above their Bollinger Band mean. What stands out for me is Goldman Sachs, Home Depot, and Caterpillar and XLY. Those were the big winners on the upside today, so those are good candidates for continuation. Downside stretches, Merck and Johnson & Johnson actually didn't have such a bad day today, but they have just fallen so far that they remain stretched well below the river. So that could be a reversion to the mean where you're buying quality on sale. So take a look at framing that on the chart and look for the tactics. I want you to notice that among the U.S. indexes there, that the Dow is the relatively largest stretch above his Bollinger Band mean of the z-square of 1.06. So on a relative basis, the Dow has relative strength compared to the S&P and IWM. And that reinforces the insights from this weekend where we saw how especially strong the U.S. large caps were. And the strongest sector in there was tech. So that's drawing our attention. That's why I sort of like tech and Intel, and that leads you to also look at AMD on the side. Columns 3 and 4, the most expanded pinch boxes, nothing really to see there. The Z-scores are not really that much. With the exception of Coca-Cola, so KO had an interesting swing pattern that deserves a look. That'd be a secondary objective. There's a lot of other symbols, though, that have compressed pretty well. Verizon, Coke. I really like Mexico in there. When you have a frog candidate whose swing river is pinched, Mexico was brilliant today. Look for more follow-through tomorrow. That's number 1 on my list of follow-throughs for tomorrow. It's a continuation. It's a swing pattern. It's a compressed pinch box. It was a big winner today, and it's a frog champion. So what's not to love? Pass the tequila. Auto Framer, you can see a handful of things that test out better than 2 to 1. Merck, Treasuries, Johnson & Johnson, Pfizer, all the usual suspects. That gives you the mechanical trade frame data already on the left-hand side with some ideas about range risk and the size of your initial stop. Regression line fractal framework, the top shelf in the green. These are the ones that are the most numbers of ATRs below their RL270 on the daily charts. So that means 3M is 4 ATRs away from getting back to the middle of its river. Natural gas UNG is almost 3. The bottom shelf in the red, these are the ones that are the most ATRs beyond their RL270 already. These are the relative strength leaders. So it's not surprising to see XLY, the consumer discretionary, 9, count them, 9 ATR above its long-term fair value. Doesn't mean it's going to fail. It just means that's how strong it's going to be. So if you see more strength in it, XLY is your go-to, pile on, get 2 or 3 intraday positions on it, or drill down further into the leading candidates like Walmart, Pfizer, Johnson & Johnson, some of that stuff. Strength begets strength. So on the stock side, it's Home Depot, Visa, GE, Walmart, American Express. 3 out of those 5 are financial symbols. So let's add XLF to that stack and consider it. So that's the RLFF. The daily squeezes. So these are symbols whose compression of their range today compared to their average range means that if you get a mechanical entry, either long or short, and simply trail it with the size of the daily range, and it just moves a range stat, the maximum reasonable intraday move, that's the kind of reward to risk multiple you get. So DIA, take a special note. That's why you got to be trading DIA tomorrow. That's why it's my number 1 or number 2. So for me, the top 3 things are DIA, Mexico, Brazil, then XLY. That's the top. Those 4 are my top 3. Yeah. So DIA is a 4 to 1. That's how tightly compressed that spring is. In either direction, there's a big move waiting to happen, followed by technology, Cisco, spiders. So SPY itself the market has compressed to such a range. Today was half an ATR. That was the most surprising feature of the day to me. So that's your framing data for mechanical entries with pretty good reward to risk ratios. Someone on there ought to be researching this, swing trading 1 day at a time with just those candidates and try to do 5 a day for 4 weeks and see what kind of R multiple distributions you get and see if you could combine that with a hybrid frog and mechanical swing trading 1 day at a time and see if there is a strategy that could become a system in there, and then report that as part of our research weekend when it's ready. And I betcha that would be good. And if you're in the sound of my voice and you want to do that, and you have a good presentation, that's a $500 coupon off of next year's research weekend or off of any service. That's how important that is. I'm going to pay virtual cash money for that. And there's no limit to the number of people that can try that. So if we got 10 studies, and I'll hire somebody else as an intern to do a meta study of those 10 ideas, and then we'll really know something about that strategy. So let's get on with it, folks. Do some work, if you wish. The Four Seasons of MACD histogram, improperly sorted. Notice how many of them are in the fall. So that's typical of a really strong move that has now started to slow down and rolled over. So the ones that I really like are the ones that haven't rolled over, but are still in the summer. So that leads me to things like IYR, Brazil, technology, XLY, and technology. So that's why I'm interested in those. Now, the spring, Mexico is very interesting. So here's one that has been horrible that turned in a beautiful performance today while the market was mucking around. This one has a long way to go to just catch up, and it moved out smartly today. That's guys that recognize value when they see it, and they're buying it on sale and are managing their risk and just quietly getting it done while the rest of us are worried about, is the market going to fail or is it going to go? Meanwhile, Mexico just chugs along. So if you are paying attention and you hybrid frog that every day because it's a frog champion, you will not be disappointed. You might even do a research report on that. Hybrid frogging and just intraday and swing trading EWW as a way of life. Also a $500 coupon if you're within the sound of my voice. Do a legit research study on it that we would be willing to share, and that's $500 and a coupon for value. I'm not going to pay you cash money because I would do that one time and then I would not have a head with which to speak. So that's what I'm looking for in pinch and stretch. The ADX still research, that's still a work in progress. The only strong ADX score there is 1.7 Z-score, that's gold. That's really diminishing. That trend is weakening. That used to be a 4 sigma. So the outperformance in gold is over. And when it's in that choppy, it's hard to trade that one. That's why I would go to wheat and precious metals rather than gold or silver directly. At the bottom of this stack, the ones that are in the red, the Z-score is less than 1. These are ones whose strength of trend is abnormally weak. It is the opposite of strong trend. That means sideways choppiness. Real estate, utilities, agriculture in Europe. These are all the lesser symbols. While everybody's been chasing tech and XLY in the US, these other ones have just been mucking around sideways. So there will come a day when those things start receiving their money and they start trending. And so I would look at that long term as a swing guy and just put a nice bracket on that and say maybe 1 or 2 ATRs above the current trading range as sort of an alert to get into that, because a strong trend would have to go that far to begin to be a trend. So I might take a look at that as a distant objective, as the mission after next, the trade after next. And I would look at real estate, EFA in Europe, really, because those are the large liquid tradables. They just haven't been swinging well. So that's something that could be ready to pop in either direction. So that's everything I want to talk about from today's report. Plenty of things to work on for tomorrow. Ken at Tortoise Capital. Keep your risk measured and your powder dry. Here we go.